traders from across the globe, and welcome to the 1,555th installment of Short-Term Trading Live with Oscar. And sometimes we have long-term targets. Traders, before we get involved in what's on the board behind me, you must know that futures trading is extremely risky, causes substantial financial loss, is not suitable for all traders. Tomorrow happens to be Fed Day, Fed Decision Day. Rates are absolutely expected to go up by a quarter basis point. We had that happen December last year, December 15th, 14th, 15th last year. At this time, a year ago, rates were raised, markets dropped a little, and then took off. I want to show you a chart about that, and we'll discuss where it went and what happened. In last night's video, I was a little coy with you. I put up a gold chart and said, hey, we're not going to trade gold today. It's the first day of a two-day Fed meeting. But we did. I just didn't want the video crowd to follow us. Traders, how was that gold trade today? Rock and roll. We sold it right at the highs, right? Beauty. We also sold the soybeans right at the highs. We sold soy meal. We had a great day today. We got out quickly, and then we sidestepped it. Now, I won't be giving you anything else to trade for Fed Day on Wednesday except for the trade that is on the site now. You Omniacs know what trade that is. You take a look at it for yourselves. If you like the risk reward behind it, put your stops in first and take advantage of what Omni thinks is going to come after the Fed meeting. So, remember traders, put your stops in, put them first. There are some occasions where stops don't actually work, but I've never seen that in 10 years that I've been trading electronically, so I wouldn't worry about it. Put your stops in first. A stop is your best friend. Now, back to Fed Day. Fed Day today, which would be Wednesday, rates are expected to go up. Bonds and gold, very interesting similarities on these charts. I can't wait to show that to you. Keep this in mind. Back in 2006, 7, 8, when we started to have our recession and then the crash, gold and bonds were way cheaper and gold and bonds went up together. Now we are basically out of a recession. There's no clue, there's no hint of what a recession used to look like in this country today. And you've got gold and bonds going back down in the same fashion, and they are raising rates now. When gold and bonds went up, they were lowering rates. They are now in raise rate mode. We'll see what they say at the Fed meeting tomorrow for sure. But gold and bonds are now heading down together. I want to show you those similarities. They look fantastic. So tomorrow we expect, no matter what happens after the mushroom up and then the run down and the mushroom back up, I think when the smoke clears, bonds and gold end up lower in the end. Maybe not Wednesday, maybe Thursday, Friday. In the end, if they raise rates, these two go lower. That's what we're expecting. Traders, a round of applause for the Omni, and I'll tell you why. I am going to take a bow on Omni's behalf. Thank you so much. Thank you so much. Thank you so much. Listen, in the beginning of this year, after we raised rates, after the Fed raised rates December 14th last year, it's 15th, right around that area, the market dropped. It was at 1,800. It moved up and down in about February of 2015. About February of 2016, Oscar Omni came out with the recommendation of the target for the year. Where would Omni go? Where Omni thinks the emini S&P will go somewhere every year, and every year I post the target. The target this year was 2240, and it has been hit. Oh my God. Did anyone expect that target as this year was going on to be hit? There is a secondary target, which everybody knows about. This is no secret. Thousands of Omniacs. You guys know. You guys have been around me. You know that I've got these targets all year. 2350 next, and I'll tell you right now, we blew through 2240 and got to 2278 and a half already, or right around there. Insanity. It could be at my 2350 before this video is over, for all we know. So we do expect those targets to get hit eventually. Now, remember when the Fed raised rates last December, we had a down spill before we went back up. I'm about to show that to you right now. Traders, if you like the charts in these videos, if you like the analysis I put forward, if you'd like to learn that analysis from me personally, I will train you here in Las Vegas. One open seat left for my February Omni Camp. February 2017, I've got an Omni Camp. It starts on Feb 9th. It goes through Feb 14th. One only open seat. If you would like to be that trader that learns the Omni for yourselves, come to livewithoscar.com, fill out an Omni Camp application, and I will personally call you and try to qualify you for the final seat. With no further ado, let's go look at some charts. Traders, emini S&P daily bar chart. This continues on forever and ever. The Fed raises rates by a quarter basis point on December 14th, 2015. What ensues next is a dip, a bump, and a dump. Okay, then the year ends. We hit 2016. The market goes up a little, comes back down, and Omni does its year-end projection. Omni gives out a year-end projection of 2240, then possibly 2350. Now that was back here in February of 2016. The market runs up, back down, up, down again, and then takes off. But wait until I really point out what happened here. Here's the really interesting thing. We do hit, bingo, crash, bang, boom, we hit the Omni target. Come on, trading. This has been going on for 10 years. I think Omni on 1 year got the market where it was a break-even year for the year, and Omni's year-end target was incorrect. Barring that, since 2007, Omni's year-end targets have been correct. Go back and look at the videos. Omni's very powerful. So the target gets hit. The next target should come in at 2350, and I'll tell you what, we're already here at 2278. Why not get to 2350 before the year ends? So, now, people want to know what the market will do, and here's what I have to tell you. The Fed raised rates in 2015. We hit the 1800 area, and we put 478 points so far on the E-mini S&P since the Fed raised rates. First the dip, yes. From the low of the dip, 478 points. If you want to take it from the exact spot where the Fed raised rates, we still put 250 points on the market. Incredible, right? So why can't this thing continue on? The Fed's about to raise rates no matter what happens in the end. This should be the end result at the end of 2017 because look what happened during 2016. Traders, that's the first chart I wanted to show you, and here's where things get really interesting. This is the gold daily bar. I've been showing this to you in video after video, night after night. This is what we like to call an Oscarism known as the F flag. Here's your flagpole, here's your flag. It breaks the 200 bar moving average. It gets breached. Once it gets breached, it goes into a tailspin and then goes into one of my F flags. And interesting, at the top of the F flag, every time it gets there or close, it breaks, right? Every time. Look where we are tonight. This night, Tuesday night before Wednesday even starts, we're right here in the gold. What should happen next is the same thing that happens every time, right? That should be what happens next. We are creatures that follow repetitive patterns. That is the cornerstone of technical analysis. That is a repetitive pattern. Why not happen again? Gold looks like no matter what happens after the mushroom pop-up, no matter what, we end up down in the end as far as I can see, or the Omni can see in gold. Look at this gold chart, and then look at this bond chart, and they are exactly the same. I mean, look at this insane formation. Just like gold, it breached the 200 bar moving average, went into a tailspin, then into an Oscarism known as the F flag, and when it hits the top of that F flag, it dumps. And here we are, basically at the top of the F flag on Tuesday night before the most likely Fed rate hike on Wednesday. I find that interesting. Now, look at these two charts side by side. Look how perfect this looks. Take a look at this. What more could you ask for, traders? That is fantastic. All right, traders, come join me at livewithoscar.com in my free trading room, and we'll watch the action on Wednesday together. Okay, traders, you've seen the charts, and once again, I mean, to me and that Omni rock or what? Have you ever seen anyone that good and that consistent since 2017? Right here, Oscar's Market Navigational Indicator, rock and roll, Omni. Viva la Omni. All right, traders, head down, nose to the grindstone, on to the next trade, on to the next call. We'll see what happens after the Fed raises rates. Keep your powder dry at least 45 minutes after the Fed. Don't do anything. But we've also got a Fed meeting. This is a quarterly meeting. This meeting and what Janet says in this meeting is way more important than raising the rate. In reality, raising the rate a quarter basis points is peanuts. It's meaningless. It's nonsense. But it's a start. It's only a quarter basis point. What she says to the reporters and what she has prepared in her statement will have a dramatic effect on our markets going forward. Listen to the conference. Traders, join me livewithoscar.com, my free trading room. I'll see you there. Remember, keep your emotions out of trading. One of the best things you can do, in my opinion, to keep those emotions at bay is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, traders. How about that Omni call to get to 2240? Woo-hoo. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.